Time now for the markets with Leighton. And Leighton, you say the trend for catfish hasn't changed much in the last month.
It certainly hasn't, Artist. We'll be looking at the latest snapshot of the aquaculture industry in a moment. Also ahead this week, soybean stocks are expected to get tighter. Cotton futures remain in a downtrend, while Farmgate milk prices may stay firm next year. The threat of higher bacon prices at the grocery has Main Street talking about the hog sector this week. News outlets have picked up on the fact that current herd liquidation in the face of high corn prices means potentially less pork in 2013 and likely higher prices for bacon and other pork items. On the farm right now, it's still described by some economists as a tsunami of red ink for hog producers. Purdue's Chris Hurt says some farmers could lose nearly $60 per head through the end of the year as animals go to slaughter. Analyst Walt Hackney says the volume of sows being liquidated across the country continues to climb.
We've seen that mount and mount and mount. We were killing nearly 7% more hog sows than we were a year ago, for instance. The tonnage kept going up, and our average market weight on market hogs, not sows, held at 269 pounds a head, and it just week after week after week. It was hard to realize that a 2.2 to 2.3 million a week hog kill was made up of that high a percentage of hogs that created the tonnage. Now we're seeing a turnaround.
Speaking of corn and other livestock feed ingredients, the government's quarterly grain stocks report came out Friday morning. Ahead of those numbers, analysts on average expected corn stocks as of September 1st to be just about unchanged from a year ago. That is not the case for U.S. soybean stocks, however. Beans were expected to be well below September 2011 levels, tighter stocks in other words. And wheat stocks, meanwhile, were expected to be up on the year. Russia this week suspended the importation and use of genetically engineered corn from Monsanto, this according to Brownfield Ag News. The action is in response to a recent French study, a study that claims the company's Roundup-ready corn caused tumors and liver and kidney damage to rats. The study in question has drawn much skepticism, though, because of the small sample group, incomplete data, and some other inconsistencies. Monsanto, meanwhile, says the Russian ban doesn't really amount to much, given the fact the country doesn't allow the planting of genetically modified crops and that it imports very little U.S. corn. The cotton market has taken hit after hit this week, and it further extended what DTN calls an established downtrend. Although technically the December contract as of Thursday continued to hold above price support at $71.05, the trend remains down in the eyes of most analysts. And many traders believe the contract could ultimately test price support near $68.90. Well, let's test your knowledge about pumpkins for a moment. That is the topic for the trivia quiz this week. The question, how much of a pumpkin is actually water? You pick the answer, 30%, 50%, 70%, or 90%. I'll tell you which is correct in a few minutes. Let's look at our government's monthly snapshot of the nation's farm-raised catfish industry. These numbers you see will reflect conditions during the month of August. The average pond bank price paid to U.S. producers was 79.8 cents per pound. As you see, prices continue to slip south. That price is down 4 cents from July, down almost 48 cents per pound than the price 1 year ago. Farm sales total just under 25 million pounds round weight, down 19% from August 2011. Processor sales almost 14.5 million pounds, up 1% from a year ago. In the beef sector, cattle traders were taken by surprise on Wednesday when both live and feeder futures imploded. Most contracts closed over 200 points lower that day in selling described by many as being related to some worries about market fundamentals. Meanwhile, analyst Virgil Robinson has been looking over the September 21st on-feed report. He took note of the placement figures and what they mean for the cattle market for the next few months.
The supply of feeders in North America, and I include Canada, the U.S., and Mexico, is going to be limited, and I would expect placements to continue to decline year over year through the balance of 2012 and 2013. So it would stand to reason, short of an economic disaster here, that prices, both retail and live prices, will head irregularly higher.
The USDA says that milk production will be down 1.3% next year. Analyst Naomi Bloom says that's a big deal for dairy farmers. She believes farm gate milk prices will stay firm.
Right now in the dairy industry, things are looking really well for prices. We will likely see the milk market stay with prices with $19 in the big picture as tremendous support. But right now we've been hovering near $20, and that's likely going to continue to happen. Demand for milk is strong right now. Of course, production is just hanging tight, and we've also seen an abundance of slaughter with the animals happening, and that's going to affect next year. And already right now the USDA is saying that production is going to be down 1.3% for milk for next year. And 1.3% might not sound a lot, but for milk it really is a big deal. And so milk prices are going to stay firm. We think that prices ultimately could maybe go up to $22, which would be a test of the highs from 2008. And the big picture still looks friendly for that market.
The answer to the trivia quiz will take us towards our feature story for the week, and that answer is D. A pumpkin is 90% water.